Have we seen the worst of the bond market volatility, especially when the market is still trying to decide whether soft landing is guaranteed or whether there is a higher recession risk now out there?
No, I don't think the volatility is over. I think it's kind of everything just beginning. There's still lots of not only data point, but geopolitical situations, elections coming up that will give us plenty of excitement to come.
Exactly. And let's stay with the Fed then. We've got Jackson Hole to get through, and then the September FOMC. Does it feel like after last week's violent market gyrations that 50 basis points, now that the dust is settled, is going too far?
I think the market was getting ahead of itself. I think the data has actually been, I think it speaks more to market positioning. I mean, we have been saying that the soft landing, although we do see tail risk, and the tail risk is going to be some shock rather than, from the general economic data. So I mean, yesterday's night kind of confirms that that's kind of still the base case of that. So therefore, and even anything, that a snap reaction isn't going to help the market. So I think now that they have more ammunition to be calm and about this whole thing is actually going to be much better for the market. But they say there's still other tail risks that we're concerned of that could be down the road.
What do you think is behind this frenzy in the Chinese bond market, and how successful do you think the PBOC's efforts to contain it will be?
So I think here the PBOC is in a very difficult position of having, multiple goals that it's trying to achieve, and these are at times conflicting. I think right now the two, pertinent issues that they're having to deal with is firstly on the fact that the economy is decelerating. Deflation is a big concern, and they need to kind of try to alleviate that. But at the same time, if you look at loan demands, they're not, you can reduce rates, but loan demand is extremely weak. So and at the same time as you kind of reduce rates, the earnings on the banks, particularly the weaker banks, decline at a time when they actually don't have a lot of things to do with that liquidity in terms of pushing out loans, or you certainly don't want them to push out loans to some of the weaker segments of the economy. And that's kind of constraining the two things happening. They're worried about, people getting too carried away with the bond markets, and obviously having seen what we saw not only with SVB but also in the UK of sharp rises the other way. They're very cognizant of that, and trying to balance those two seem to be at times quite difficult.